It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul's triumphant method for any individual who needs to take advantage of the opportunity. The crypto business presence is to play the big picture approach, keep away from influence and guarantee that significant cryptographic forms of money like Bitcoin, Ethereum, and Solana structure, a bigger part of your portfolio than your DGN Sachs buddy, particularly cautions against utilizing influence as indicated by the previous Goldman Sachs leader that is precisely how you this up. You'll miss out on the best investment. Opportunity ever accessible to the human race, pal, is also of the opinion that the world near the very edge of an all-out mechanical update pool, which he says will change each part of the monetary world as a result. He alerts that we could have just 6 additional long periods of these gigantic opportunities available to the whole world. Turns out to be totally unrecognizable. He makes sense of additional that only those who maximize their opportunity presently will actually want to unwind with their huge sacks while watching the rest of the world attempting to appear to be legit of all things, and lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel, Everyday Finance. Thanks.
Yeah, so my working thesis now is, you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20.
It's mind-blowing when you put it into that perspective. It's pretty incredible.
Because people lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto. And many greats of the industry have gone down the same journey. Many of them were Global Macro Investor subscribers, Dan Tapiero, Mark Yusko, a whole bunch of these people, Alan Howard. You know, they've all gone down this path of, fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? It takes a while for people to get this. And what I keep trying to do is get people to say, okay, I love gold right now. Okay, great. Divide it by the Bitcoin chart. You know, I love oil right now. Great. Divide it by the Bitcoin chart. And our job really is to maximize our returns. You know, we're trying to look after our future selves here. So as an investor, you've got to take the optimal asset. Now, everything is correlated. Even crypto is part of the same cycle as technology stocks. You know, most equity markets, commodity markets are just lagging. It's all the same bloody cycle. So you don't need to choose one asset. Everything else is just suboptimal returns.
Former US President Donald Trump, right now having to deal with criminal penalties in various wards, has reported that the 2024 campaign for president will accept digital money gifts. The Trump 2024 campaign made a fundraising page available on May 21st, permitting qualified people to use cryptocurrencies to make donations. The Coinbase Commerce website that was displayed logos of different digital currencies, counting Bitcoin, Ether Dogecoin, Shabbat Inu XRP USD Coin Solana. Declaration referred to Congressperson Elizabeth Warren's reactions of cryptographic forms of money, AUS, involving her without proof of going about as the spokesperson for President Joe Biden on the matter, during a new supper for allies who bought a non-F funable token, including a mugshot of Trump. The previous president communicated his expectation to empower crusade gifts in cryptographic money with under a half year staying until the 2024 final voting day. Trump is viewed as the hypothetical candidate for the Republican Party, about to face President Biden, the possible progressive faction chosen one, while Trump's crusade site currently acknowledges crypto money. Gifts' issues page does not, as of now, notice computerized resources, or President Biden has rarely used blockchain-made statements about digital forms of money, however marked and lead a request in 2022 to lay out an administrative structure for computerized resources in 2021, subsequent to leaving office. Trump communicated suspicion about Bitcoin, calling it a trick, while inclining toward the US dollar as the worldwide cash anyway during his mission-rival competitors, B.C. Ramaswamy and Ron DeSantis, make statements regarding digital central bank currencies, CBDCCs. Trump proclaimed in a January 2024 crusade occasion that he could never permit establishing a CBDC in the United States. Let's get back to Raoul Pal interview.
Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risk. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins.
Raoul Pal's $100 trillion long-term forecast for the cryptocurrency space is comparably bullish as his close-term 10 to 15 trillion expectation for this cycle that is a 3 to 5x development from the current $2.5 trillion market cap if an individual is included digital currencies. Bitcoin goes from its current scope of $68,000 to $70,000 per coin to anywhere from $280,000 to $450,000 preceding the cycle closes in 2024, and it's possible that Ethereum is on its approach to $200,000 to $20,000 per token. Do you concur with Buddy's expectations and examinations? Senior Bloomberg ETF investigator Eric Belines raised the endorsement chances for the Ethereum Spot ETF from 25% to 75% on May 20th, impacted by political strain. This change followed a critical May 16th goal by the U.S. Senate that upset the SEC's announcement 121, which had forced severe capital prerequisites on banks holding client-advanced resources. Before the Senate vote, President Biden had demonstrated he may employ executive authority to veto any goal that would turn around the SSC's strategy anyway. The Senate's choice, leaning toward cryptographic money reception, incited an essential revaluation at the White House as per Paran, exhausting the organizer and president of the blockchain exchange affiliation, Advanced Chamber, the SEC's seat. Gary Gensler had recently shown impressive hesitance to characterize Ethereum as a non-security, or on the other hand, to allude to any probability of accepting its position as an ETF. But the landscape moved emphatically on May 20th, when the SEC supposedly mentioned updates to the spot Ethereum ETF filings from trades like No in Nasdaq. In spite of potential contest from Ethereum, the presentation of its spot ETF is logical to be comprehensively useful for the growing cryptocurrency industry. Great climate for venture. The reducing against crypto administrative position in the US could support more venture chiefs, including benefits assets, to embrace a better perspective on the area. Generally administrative vulnerabilities, whether focusing on mining activities or security-driven delegates, have unfavorably impacted the value of Bitcoin. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.